Aloha, everyone. Welcome to Java, and thank you for joining me on this Tuesday. This is for November 28th, 2023, and it's the day after Cyber Monday. So, just like Black Friday, they're saying that the records were smashed for the purchases. We'll get a little more information on that later on. But I want to start right into this. We've got a lot going on again. Our favored risk indicator is the MMRI, and it's showing quite a drop. So steady at the moment, but we're watching this. If it drops too quickly, it's actually a concern, and we'll go into a little bit of why. So the main factors are the relative strength of the dollar, if you're new here, paired with the United States 10-year yield. So those, as we were talking about yesterday, did hit that support bottom, and now they're beginning to rise. And as they do, stocks don't like that. So their prices generally drop, and that's what we're seeing. So right now, stocks going into the red to match the futures. We're watching the volatility index, or VIX, which we call the fear index, is rising a bit, still pretty muted. We've got gold is comfortably above the $2,000 level now, and oil is starting to catch a bit. We've got an OPEC meeting coming up, and they're going to be talking about restricting supply. We'll talk about that a little bit more in a bit. So right now the sentiment is mixed. Risk is slowing down with strengthening of the US dollar and the 10-year yield. So these treasuries are being bought up again. And that's a combination of foreign countries, hedge funds, basically trading in their dollars, dumping dollars, and purchasing the treasuries, also part of a rebalancing for some portfolios. The other side of that is the Federal Reserve is stepping in to purchase some of these since the sales are weak. So going into our calendar, we've got a home price index coming in. We've also got a parade of Fed presidents for today. And tomorrow morning, prior to market open, we're getting their numbers for GDP, which I expect to be strong because that includes defense spending. And we've been pouring tons of money over into the war overseas. We're also getting advanced US trade balancing goods and then the beige book. So we're going to hear a little bit more about them talking about inflation and their concerns for the returning of inflation. And that's their reason to keep rates steady and not cut at this time. So we got new home sales. They dropped. So this is a major lagging indicator. So this is for October. We knew the numbers would come down. I'm a little surprised it dropped that much for the lagging indicator, and they allowed those numbers to be published because they were much lower than expected, which is reality. But as I said, that's a lagging indicator. They're just getting this now, and I think we're much worse off than what they are reporting. Starting to watch supply flood the market, and that will also suppress prices. If that mortgage rate comes down to that 7% we were talking about, it will kind of balance out what's been happening there. And they'll have to watch that. So we've got the morning bid is the treasuries that we're selling, and then oil is bracing for an OPEC plus meeting. And what they're going to be talking about is how much to restrict supply. And this is basically manipulation so that they can keep prices high enough that they can benefit from this. So we've got another story that I wanted to bring up. We were talking about Bank of Japan holding off and promising to hold their monetary policy, but their paper loss. So this means they have not realized this loss yet. However, if it continues, they won't be able to hold this. Their loss on bond holdings a record $71 billion. So until they have to refinance this debt, it's not a problem, but we've got to keep an eye on it because they will make a move with that if it gets close to that time. So and why are we watching, foreign countries? Because that now affects the global markets. They're tied in more than ever if you're new here. So just want to explain that. We've got the European Central Bank hikes. Now these, since they're tightening their lending, just like the United States, it's plummeting, going off a cliff. Businesses can no longer access loans that they need to either keep their businesses going through these difficult times, purchase supplies, materials, or pay their labor, which costs are increasing. So this will force basically more businesses to close. They cannot have access to this money or capital to keep their businesses going. So we've seen this happening in the United States already, and that trickle down from not getting any money from the loans, not being able to lend, is affecting the banks. So those that have to take these loans, it's kind of creating a squeeze in regional banks. And so this is a list of the regional banks that they were talking about might go under. And we're going to continue to see more smaller banks either close or get bought up by the larger banks. So it is a trend now. And this is just talking about gold, as we did see the price increase. Goldman Sachs is saying that basically, if they're talking about rate cuts, that'll increase inflation and devalue the US dollar again. So they want to buy something that will hold the value. And I suggest that we do the same thing. So another aspect that's going on is basically they are going into, along with gold, any other assets that can trade outside of the system that will hold value is what I recommend. So this story is JP Morgan is expanding the payments, doing corporate banking services in Abu Dhabi. And this is not just expanding their payments, but they're going into cryptocurrencies, crypto exchange directly with Saudi, Abu Dhabi, basically going onto the cryptocurrencies, central bank digital currencies over there. Along with that, we've got Standard Chartered. So before you just accuse America, this is basically England is joining China's central bank digital currency, the pilot testing. And the more important part about this is that the EU one, the CBDC for China, is already out to citizens. And so they're basically using the underlying payment methods. So building on this backend will allow them to introduce more central bank digital currencies and to work with each other. So it was not long ago they were all talking about how they would not do this. And it is exactly what they're doing now. And why it's such a problem, if you've been here for a while, you know that it's the control and the surveillance that will come along with this. They control the money completely to where they can shut it off, expire it, or multiple other things. It's a problem. So stay with us and we'll get you up to speed if you're new here. Thank you for that. So we were also talking about Coinbase. I've been talking about how I expected them to get some strength from a couple of things that have been happening. They hit their bottom of about $78. Again, not financial advice, but just watching what is going on. So they've hit their 18-month high because of what happened with Binance. They're basically filtering out the other exchanges. And if that ETF gets approved, they're going to have to name an exchange. And Coinbase is one of the main ones that has been approved, accepted, and so kind of like a shoe-in for what's about to happen. So with that, I would like to give a couple of lava updates. This is a story. It's from the Epoch Times, and I can put a link in the description or go over this a little bit more. But basically, we've been talking about this United States spending billions on overseas wars and who actually benefits. So we've been watching defense contractors in the US, whether this is Raytheon or Lockheed Martin, the ones that are creating some of these things. Another silent one is actually Boeing, because they do build for these. But this all increases our GDP for the United States. And this is aside from all of the corruption that is going on. We're not even talking about that. But I just want to bring that up. But that trickles down to other issues for personal security. So I just wanted to bring up a Black Friday sale. I don't know if any of you got into this one. I think it was kind of a fun one. But even if you're not interested in firearms, you don't have to be. There are other methods, whether it is sprays, different types of securities, just to make sure that you can take care of yourself and your family, because I think that will happen on a local, domestic level. We've got some other threats coming on. I want to make sure you're all taken care of. And I want to bring this up really quickly. This is talking about Arizona alfalfa farms unregulated water. So what they're trying to do is they're trying to regulate foreign investments that have purchased real estate, and now they are pumping water out of the groundwater supplies. The problem with this is there's no delineation. So if they are allowed to regulate as they will, they do hold the property. So if you don't want them to purchase the property, you have to hit it at that level and purchase the property yourself or do something else. But regulating the water means that they'll be able to regulate it for private individuals. And there's obviously massive issues with that. So with that, I wish you all a green trading day, wonderful day in general. We'll see you again soon. And until then, my friends, stay free.